All right, good afternoon. This is Len Nevin with Loyalty Home Group at eXp Realty. Just wanted to say, one, Happy New Year. Just excited about the new year, some of the new opportunities, what's happening in the real estate space, what that means for you, for your certain, your current properties or property, what it means for future purchases, everything in between. Here's how we're going to start. So interesting, there's been a lot of things that have been happening from an economical, from a just international perspective with some of the stuff with Iran. And so we're going to talk a little bit about how that's affecting us in the real estate space and how it affects you personally with your personal financial investments, things like that. So let's start with mortgage rates. So interesting enough, mortgage rates have dropped. So that's a good thing, I guess, if you're looking at that. So let me pull over to my screen where I can show you that. So here we are, mortgage rates. So let's take a look at this real quick. You can see right now that the mortgage rates actually dropped slightly as we kicked off the new year here. So we are currently at 3.64. So you can see this trend here as we go through, a year ago. A year ago, we were kind of having this conversation about 4.45, and now we're down to 3.64. So we're not a full point down compared to where we were a year ago. You can see that we hit a low point in the last 12 months of 3.49. So that is obviously a full point, basically below where we, almost a full point below where we were 12 months ago. But you can see this little steep drop right here between last week at 3.72 to this week at 3.64. So right now, what that basically means is that banks want you to buy or to borrow. So this is going to affect personal loans, home loans, all the above, right? Auto loans. So this is good stuff when you see that the rates are dropping down. And interestingly enough, mortgage applications are up. So it's not just seeing the rates to try to get people going. People are going. So we're already seeing an influx of activity. We're already seeing our lockbox activity kicking in. We're seeing our showing activity pick up. I mean, it basically didn't stop. Ironically, we, at least here in the Phoenix market, we didn't really see too much of a hiccup from it. In Chicago, our market, we did have a little bit of your typical holiday slowdown. I don't want to say it's a slowdown, it's just typical seasonal type stuff. For instance, we've got a property that we just hit the market in Libertyville, $500,000, beautiful home. Just hit the market a couple days ago. We don't have any showings yet, but the online activity has been through the roof. We've had multiple, I think about 7 or 8 people mark the property as interested. We've just scheduled an open house for Saturday, so it'll be interesting to see how that goes. And to see, we'll probably end up having some showings over the weekend on that property based off of the internet traffic alone on it and the people marking levels of interest and saying, I want to go and see that. So that's kind of what we're seeing there. And, for instance, we had another property that we had a bid on, and the buyer lost out on it in a multiple offer situation in the city of Chicago with one of our buyers. So there's definitely, there's activity happening, no matter where you're at, which is good. And this shows you kind of why, because, interest rates are favorable. So this is good stuff. If you're looking to buy this year, get in, talk to your lender, find out what it's going to mean for you. I anticipate that rates will, I'm not saying that they're going to continue to drop, but as you can see the trend, it basically drop, and then right around September, October, it's been staying pretty steady. So I anticipate probably a lot of steadiness here, at least for the first quarter. Who knows what happens after the spring market, but banks, the Fed, all that stuff want to keep this thing going. Let's talk a little bit about my favorite topic, gold. So gold. So gold was interesting this last week. And I've got to reload that page. Sorry about that. So right now, the stock market closes in about 40 minutes. And right now, you can see this has been the day of gold. It's been up, it's been down. Here we go again. It's been up, it's been down. And right now it's $7 less, basically an ounce than it was, earlier today. And then you can see at this point, this is pulling over the last couple days. And then if I give you this 30-day snapshot, you can see, that's not 30-minute, sorry, snapshot. You can see we hit a peak of $16,011 an ounce, and that happened basically. You can see this huge. It was sitting here and it spiked up, and that was all happened right as we were reading the news about Iran attacking um, our military facilities. And then once we found out that there was no casualties, you can see it just kind of shot right back down, and now it's kind of bounced off. So if you look at kind of a historical, not historical, but you can see back in August, kind of shot up in August, hit some peaks, and then bounced around a little bit low, and then it's kind of back over to here. So, it's a good indicator to see where the investors feel the stock or feel the economy is going. When they feel like things are kind of falling apart, you'll see gold shoot up. So, for instance, if you're looking and kind of trying to read the crystal ball, you don't want to see gold spike. So when you see gold going down, that means that there's confidence in the dollar, there's confidence in the consumer. That's a good economic indicator that things are going good. Here's the Dow for the day. We're up 129 points. All-time highs again, 28,900. I mean, 28,900. It's just like unreal. When you look at this jump. Boom. Was it 28,548? And then this has been today. So just shot up, and now we're sitting right around here. So this has been a good day. Statistically for the stock market, when you look at, if I go to kind of more of a long-term look, if I go 1 day here and take a look at this, and you can see that the market is just, since August, it's almost a straight line, has just continued to go up. So that's, all indicators are stating right now that as of right now, things are looking good. People are confident in the market. People are confident, investors are confident in our economy. One of the things that I read yesterday that caused our stocks to go up a little bit here just recently was the fact that the jobs report came out again. It's still good news. So, I mean, it's hard to argue that, if you're sitting there looking and going, well, I don't, and the reason why I bring this up, right, is because we get this all the time. I hear people say, because it's still fresh in our mind, right? Well, I'm waiting for the market to crash before I buy. And I've been hearing that for the last 2 years. And unfortunately, that has not boded well for people regarding trying to build wealth, because the average price, I'll have to find that graph for you guys next week. But the average price 2 years ago is lower than it is today. We've seen it continue to grow. And so and that's averages. So some houses are different, some neighborhoods are different. Everything is hyper local, but nationally, waiting for the stock or waiting for the real estate market to crash is not a good strategy. The one thing I can always tell people is, it's like, look, if you go ahead, wait for the market to crash, that's great. Do your thing. However, what I can tell you as a fact is, if you're putting $1,500 a month in rent every month into somebody else's pocket, you walk away at the end of the year with $0 in equity. Zero. Now, if you put $1,500 a month into a mortgage, into your own pocket because you bought a home, you're building equity. There's no ifs, ands, or buts about it. The biggest question, the biggest fear that I heard from people at the end of the last, when the market crashed 10 years ago, was, I feel trapped. I can't sell because I'm underwater. And those were real conversations with real people, with real situations, because the numbers dropped, and it was true. I paid $350 for something that's now only worth $250. Where am I going to come up with $100,000 to cover my gap here? And it just was impossible. You couldn't do it. So those are real fears. However, what I can tell you is, based off of our current market, and by keeping an eye on this stuff, right now our biggest thing that's driving homes are still this conversation of lack of inventory. And it's not nationwide. There's certain, Chicagoland is in more of a buyer's market than it is here in the Phoenix market. So we're seeing it in, opposite ends of the spectrum in the multiple markets that we work with. But it's not a horrible market if you're a seller. Yeah, you got to compete a little bit, but it's not like doom and gloom like it was, 10 years ago. So it's really just more of a balanced market in Chicago, where we're still seeing, in Phoenix, we're still seeing more of a seller's market. That's really the only difference as far as if you're going to pinpoint it. So let's talk a little bit about activity. So this is right here, and let me see if I can zoom in on this for you. This is the MLS activity for the month of December. So you can see that the average price range and the most commonly viewed price range in December was 200 to 300,000, and there was over 32, almost 32, yeah, basically 32,000 showings for those properties. What was it actually? 31,630. 7.22 showings per listing, and you can see based off of the different prices, this is where that all ended up. Now, this is what we're seeing already year to date, just in the last 9 days. Same price range is hitting it hard. That's where the big, this is where all that competition is. I know 3 to 400 still has a lot of competition. So these are the two categories. If you have a house that you need to sell that's in these two price categories, there's a good chance that you're going to have priced correctly. Some multiple offer situations, you still got to price it correctly, but those, they're out there. And look, the showings per listing is definitely lower. So this isn't telling you how many showings to a contract, but this is definitely saying that right now, the activity is moving pretty good. You've already got 10,000 showings in 9 days. You calculate that over what it was in December, and it's right on par. I mean, you can see it's just been consistent across the board. We haven't seen too much, except for the showings per listing is down, and that mainly could be because properties are going under contract. They're not able to hit that 6 or 7 showings because we haven't seen a big influx of listings yet. People think they need to wait until February, but I've been telling people, like, look, there's a lot of buyers out there looking right now. List now. Don't wait till February when there's a lot of competition and you have the same amount of buyers with more listings. You want the same amount of buyers with less listings. That's going to give you a higher chance of a good price. Now, if you're a buyer, you just got to be aggressive on it. Depends on what your circumstances are. In Chicago, this is an interesting. This they run our statistics a little bit different over there, but we have this showings per listing over here as well, and you can see that it basically, this gives me kind of a 2-year snapshot, 3-year snapshot. If I go 1 year, this will give me month by month. And so from January of last year, it spiked up in February at about 5.5, and then right now it's at about 5.1. So what I would anticipate is that as the year goes, it'll probably kind of go back up again. Showings per listings, showings to contract, they do show this, and so it's saying, in the Chicago MLS, for every 10 to 11 showings, you should have a contract. Now, the National Association of Realtors has statistically said that that number is between 7 and 10. So this is kind of right on par to what National Association of Realtors has historically said, which means we're in a balanced market. This is not anything to be afraid of. Now, if I hit 5 years, just for the sake of argument, crunch the numbers. Okay, that's going to take a minute. We'll see what that shows up at. But yeah, you can see 12 went down to 10, back up. So it's bouncing, right where it needs to be. So I think we're in pretty good shape when I see about 10 to 11. So when I'm watching and I'm working with my sellers in Illinois, and I do the same thing here in Chicago, we're counting how many showings. And when we're at about 5 or 6 and we don't have any offers, it's like, look, we're getting the showings. So what I would anticipate is that we should have an offer here relatively quick, just based off of the fact that we're getting the activity that we're looking for. So that's kind of a quick snapshot of what's going on in the real estate market. I have this many predictions as far as what to expect for 2020, except for everything that I read. And everything that I'm reading right now is saying that we're going to continue to have low inventory issues. The builder permits are not matching the rate of growth, not only from a population perspective, but a population into home ownership perspective. That generation of whatever, the millennial generation, Gen X, you know, those, that price bracket is not necessarily, they're moving into the market. And so what we're seeing is there's, based on what they're looking for, there's not enough of the homes for them, especially at entry level. And that's kind of an issue. And then the flip side of it is they're expecting to start to see a conversation about baby boomers now downsizing. And so what are these, who's going to buy these bigger houses? And they're expecting, my generation to kind of come in, the people who are in their 40s and 50s to move in and take up those bigger houses. And, it's a different conversation depending from a national demographic. A lot of people in my generation lost a lot of money during the market crash 10 years ago. Most of them have recovered that I talked to, so they're probably in a position to move into those homes with a job. Jobs the way they are right now, that should be good. So there's probably definitely going to be some buyers for those homes, and people move up, people move down, and it just everybody just kind of cycles through as they say it. And I think that that bodes well for a pretty good and healthy real estate market here for 2020. And like I said, there's only, I think I read an article, they were only expecting like 6 or 7 major, like not major cities, saying like, big cities like Chicago, New York, but really only 6 or 7 different markets across the country that they would expect any sort of like a negative from an equity perspective. San Diego is still expected to be a pretty strong market. San Francisco, they said, they're expecting it to slow down a little bit, but they said that a year ago. And what did we see in 2019? But massive, pricing growth, and it was all back down to supply and demand. Not enough supply, tons of demand, and that's what created what we saw in 2019. So it'd be interesting to see what we see here in 2020. I'm excited about it. The biggest conversation I'm having with people right now is where are you at, right? So you log into your TD Ameritrade account or your E-Trade account, and you know exactly where you stand when it comes to what your home is worth, and or sorry, what your stocks are worth. You know how much this stock is selling for, that stock. You got a good snapshot of what your 401k accounts sits at. You know what your balance is at. The problem is that most people don't have that kind of an accurate statement for their home. And so a lot of the conversation I'm having with people right now is, look, just get a good idea on that. And then what I can do is I send monthly reports to those folks just saying, here's where you're at, here's where you're at, here's where you're at. And here's where things, because if let's just say that, hypothetically speaking, let's just say the market crashes. Total hypothetical. The market bombs and prices drop down, and it's 5 years later, and you get to tell everybody, yeah, I saw the market was about to drop. I sold my home for 300,000, and then right now it's only worth 200. You get to look like the smartest person in the room because you knew to sell when it was high and get out. And that's what a lot of people did in 10, 15 years ago when they saw the market was starting to downturn. There was people who were like, look, I got to jump ship. I got to get out of this place. I was going to move in 3 years. Now it's now. And that's the thing, is if you're going to be there, like, look, I'm going to be here for 20 more years. Don't worry about it. It'll go down and it'll come right back up. So don't worry about that. But if you're thinking, okay, well, I need to, probably be here another 2, 3 years, and then you're watching those market reports and you start to see, wait a second, I'm seeing some trends where, the market doesn't look like it's moving in my favor. It may be time for us to have a conversation. We say, look, let's pick this up a little bit. Let's advance my plan. I think it's time for us to pick it up and say, well, let's not wait 2 more years. What does it look like to sell it now? Because I think the market may be going sour, and we'll study it and we'll look at it. And if I agree with you, I'll let you know. If I don't agree with you, I'll let you know. I'm not going to steer in the wrong direction by any means. And you get to make the decision, obviously, give you the information, make the decision. So that's a lot of the conversation I have with people right now. That and timing the market right now, trying to get their properties ready to go, get them, put in the market at the right time, this time of year. And, that's kind of where that's going as well. So reach out if you have any questions. That's what I'm here for. I'll put some information in, the text below if you happen to catch this after the fact. And, we're here to help. So thanks again. Have a great 2020. It's already starting off pretty strong. So happy to see what's happening, and, excited to see what the future brings for all of us. Have a good one.